Hey Dan, sorry. This is a blooper reels. Hey everyone, thanks for joining the channel. The last and most important thing when it comes to assets are to operate and also exit, because that's when you get paid. So when you exit an asset or you're building the passive cash flow, that's when you start seeing those dollars clocking into your bank account. Up to this point, you're expending resources to acquire the asset and you're expending resources to operate the asset. One of the key things is that you want to be mindful of is when you did the numbers in the beginning. Double check, go back as you're operating the asset and make sure your capital investments, your CapEx, that are doing the value add contributions are yielding the pro forma or what you expected to yield when it came to either ARV, fair market value, or your rents, if you're doing long-term rentals, or if you're doing short-term rentals, what's the daily average rate? Take a look at how your trailing six, or what we call T6, and compare it to what your forecast was. Again, if you're off the mark, or hopefully you're doing it right? You're applying SPAR, you're applying the patterns, you're doing the right things, you're getting the passive positive cash flow. But the key thing at this point is operationally evaluating the asset, making sure that if you're doing long-term rentals, that you're making your expenses in line with your gross operating revenue. Your expenses when it comes to long-term rental should be 40% or less. And we'll talk about how to make sure that you're managing those expenses on a day-to-day basis and make sure you have adequate amount of reserves so that way you can really exit and get paid. Now, when it comes to fix and flip, right? There's a lot of aspects of fix and flip with regards to your contractors, especially with this day and age in terms of supply chain and labor constraints. That's where your network comes in handy, making sure that you have cash on hand to pay your contractor labor, so that way you're only paying taxes, sales tax when it comes to your materials. That's again, operating efficiently, right? So operations is a key factor to it, and a key factor to operations is making sure your expenses are aligned. And the third thing that's key to making sure you exit and get that profit or the cash flow is to assure that your books are in order. If you're doing any kind of management of your asset, whether it's being managed by a property manager or yourself, is using tools, whether it's QuickBooks, Buildium, other prop tech software to really manage those expenses, track them, so that way you're always kind of making sure the trends are going down when it comes to expenses, and obviously your revenue or your rents or your short-term day-to-day rentals are going up, right? So you wanna constantly try to figure out how to grow or make that margin bigger, right? The delta between the two. It's very important that you're detail-oriented. Yes, you can hire a CPA, you can hire out a lot of this stuff, but when you're starting your journey, it's very good that you're doing this hands-on, because it's gonna build upon your foundation, your knowledge. Because when you turn over the keys of your baby or your apartment building to another person, you wanna be able to spot check them and make sure that they're doing everything as if you were doing it on a day-to-day basis, right? Assume good intent, trust, but verify, right? It's very important that you should be hands-on in your first couple of fix or flips. You should be hands-on as much as possible in your short-term rentals, and you should be hands-on when it comes to your LTR. Just like in engineering, you didn't become to where you are in terms of your lead position and be able to delegate tasks without being able to spot check. It's the same thing when you're building a team. You wanna make sure that you can call BS when somebody's like, hey, you may check and be like, I see that we went from 3,000 positive cash flow a month to 2,000, what happened? And they're gonna give you all kinds of excuses. Well, you're gonna be able to have to read in between the lines because it already happened. You have to be able to look at bids, you have to be able to look at contractor bills, you have to be able to walk backwards to understand whether or not they may have skimmed off the top. And unfortunately, in real estate, there's a lot of shady people. And so you wanna recognize that, right? Recognize there's gonna be variability. Always recognize that people are doing things in your best interest and that you're paying them to do the right thing. The very important thing is to recognize a problem, apply a pattern, correct it, and get a result, which is hopefully gonna be positive cash flow or a positive yield from that asset. Again, fundamental things here. One, operate the asset, be hands-on in the beginning. 2, make sure you keep good books, keep a good ledger, trailing 6, trailing 12 as we call in the industry. And number 3, spot check. Make sure that it's very important that you're looking backwards and iterating and pivoting, right? And moving and making sure you don't get punched in the face, right? Or fail. And that's going to be a key aspect to getting paid. At the end of the day, we want to do this for our family and make sure that we're getting paid at the end of the day. So if you find this useful, we're going to dive deep into each of these as a follow-up. Please, again, make sure you subscribe so that way as we release the content that are more in-depth in details, that you get those notifications. Again, wake up, take action, stay motivated. If I can do it, you can do it too. DC driven. Thanks.